So now that we have all of the paperwork in for June week number 5, we've cleared the banks, we have reconciled all of the accounts, and we've even reconciled the clearing accounts. The next step is our month-end review, and then we can move on to our GST, HST review and prep. So in previous months, we've had a simple monthly checklist and a simple month review, but we're going to go into a little bit more detail here with the June month review. So we did start off with a very simple checklist. This is the reference page that you received at the beginning of the case study to sort of help set up things. The last 4 is a helpful reference. And then down at the bottom, there was a checklist to say, okay, make sure you do these items and that you reconcile these things. But now that the case study has become a little bit more complex, I can really illustrate how to do a much more thorough monthly checklist and month-end review. So I do have a generic monthly checklist that is available for download. This is generic. This is to make sure that you've put in all those items that you need for each month. And it's coming from the perspective of the business owner, meaning to say, what is the profit for the month? Have you moved 20% to savings? And what is the GST for the month? And have you moved that to savings? So this was just something that I put together a while ago for DIY bookkeepers and new business owners. And sometimes people find it easier to use in an annual checklist way. So those are available for download from my website. But what I have created for this case study is a much more thorough monthly checklist that incorporates the month-end review. So this checklist is coming more from a bookkeeper's perspective, but if you are a DIY bookkeeper working in and on your own business or an office manager working in and on a business, you can absolutely modify this to suit your specific situation. And we're going to use it right now in the Grand Gate Gardens case study. So there's a couple of different styles of bookkeeping. There's one style that I call after the fact bookkeeping. So all the stuff has happened and the business owner gives all the paperwork to the bookkeeper and says, do the bookkeeping. So that's like after the fact. And then there's something that I call live bookkeeping. So live bookkeeping is often done by either a DIY bookkeeper, so business owner, or an office manager. And they'll enter the bills and pay the bills right from QuickBooks. So there's no after the fact bookkeeping to be done, because literally printing the check for the bill payment from QuickBooks puts in the payment in real time, and invoicing clients out of QuickBooks and receiving payments through QuickBooks, all of this is done in real time. So that would be more like real-time bookkeeping. This checklist is coming from the perspective of after the fact bookkeeping, and again can be modified for the live bookkeeping as well, just to make sure you're doing those things that you might not think of as you're doing the bookkeeping live. So from an after the fact bookkeeping perspective, when you get a chunk of paperwork, and I always suggest, even if you're doing after the fact bookkeeping, do it monthly. There's so many reasons that this is helpful and useful in terms of the dates are all, you know what they are, whether it's 5/6 or 6/5. If you're working on June, you're pretty sure that's all June. So there's one example. Also, the business owner happens to remember things a bit better because it just happened a few weeks ago. So there's very, very many reasons why doing bookkeeping on a monthly basis is more accurate and more efficient. So when we're doing our after the fact bookkeeping, we haven't looked at it for like a month, right? And if you might have more than one client. So before you dive right into the paperwork, you just want to check your notes from last month, right? Were there any to-dos that you still need to do? Was there any outstanding questions that you need to clarify before you begin working? Things to remind you about notes or questions. If you had questions last month, the answers might help you with unknowns this current month. For all of these reasons and more, just take a beat and look at your notes from last month. Then before I even start to dig in, I just go in and make sure that the bank feeds are connected and updated, because then you can sort of reach out to the business owner for assistance to getting them reconnected. So that's an important step. And that's what we've been doing sort of in the case study. The very first thing that I've done every single week is upload the bank feed, because it's a great reference and resource. Even though I'm not doing bank feed bookkeeping or cash accounting, that bank feed is a great reference to help me make sure that I get my entries in right the first time without having to guess, how is this paid? I have the bank feed right there. So we've already done those two things. We've gone ahead and entered all of the receipts. I call those charges in the case study, because as you've seen, like even big bills, if like big pieces of paper that we wouldn't consider receipts necessarily, if they're paid the same date as the bill date and there's no check number, they can just be entered as an expense entry. And I call those charges. Then we go ahead and we put in the bills and the bill payment information that came through. Now, usually after I've entered the bills and the bill payments, that's when I go ahead and check those vendor or supplier account statements against the entries that I have in QuickBooks to make sure I haven't missed anything. So those are very useful to get from the suppliers. So if the business owner wants to help ensure the accuracy of their bookkeeping, reach out and connect with the suppliers and make sure that they're automatically sending those statements out. Even if there's no balance carried on the account, even if it's just like transactions, it'll catch anything that might be a typo, or it might catch anything that's like a double billing, and it might catch things that you might have inadvertently paid with your personal or with cash, just to make sure that they're all in the bookkeeping. Then we move ahead to the receivables. So we'll put in the invoices or the monthly sales statement, so on and so forth, the payments, and make sure that all the deposits are entered into the bookkeeping. And then you also want to make sure that the payroll is entered. Every business has their payroll is different. So whether it's in QBO or whether it's in Ceridian, you have to make sure the entry is in correctly. Or if maybe there's manual payroll being done and you want to make sure that the payroll tracker is updated, not just the bookkeeping. So that is on our monthly checklist. Now, once all of the source documents are entered, that's when I go ahead and begin to clear the bank feeds. And we've mentioned it before, we start with the credit card and then go to the smaller accounts and then move up to the operating account. Now, the title of this section is called Enter Entries Without Paperwork. So clearing the bank feeds, you're going to see those bank fees, you're going to see the reoccurring payments, all of those items that you probably would have entered from the bank statement before the bank feed existed. Then next is the WSIB bill for the month. So a lot of times we don't think about the WSIB until it's time to file. Every quarter, that's in Ontario. Now there are provinces that do the WCB monthly, but again, you want to have that bill in accrual, not when it's paid, but when it was incurred. So in the month that the payroll associated with that WSIB premium is incurred, that's when you want to put in the quote unquote bill. So what we did, and we just did that this June week 5, is we did go ahead and put in based on the WSIB rate and then the earnings that are subject to WSIB, and we put one bill in each every month. If we do that moving forward now on a monthly basis, then you're going to get a clearer picture of your expenses month over month. Now, the next thing on the list, we haven't actually done with the Grand Gate Gardens case study, but what you want to do is you want to check CRA every single month just to see if there was any interest or penalties incurred that current month that need to be represented on the bookkeeping. Now, if you're working on your own business, you're going to go through your CRA My Business account. And if you are working on somebody else's business, you're going to use Rep a Client for that. And just a note, the CRA interest and penalties is not a claimable expense for the business, but it is an important expense to track for the business in general. So when I say claimable, I mean you can't reduce your taxable profit by CRA interest and penalties as an expense, but we still want to see it on the profit and loss because it is still important information to analyze the profit of the business. So that's why it has that special GL account, CRA interest and penalties, or you might even see non-claimable interest and penalties. And one thing that I didn't put here that I should also add is also check for online mail. I say that because CRA has switched to like digital unless you opt out for everybody. And so you'll get an email to say that there's mail for you to check online. And you have to then go to your CRA account and check and look at the mail. And if you're, working on somebody else's business, you can be that help to say, hey, did you know you have a letter here saying that you owe such and such, or you need to do such and such? So if you're going in to check CRA for interest and penalties every month to put into the bookkeeping, you might as well stick your nose over and see if there's any mail there, you're in there anyway, just to save some time and to help if there's anything that might have been missed. So specific to Grand Gate Gardens, every month you want to make sure you put in the square fees and also reconcile the square clearing account, but making sure that the square fees are going to help you when you go to reconcile the square account. Moving on to reconciliation, note that I've said, including resolving uncleared items that should not be there, right? I call those the white lines. When you go to reconcile an uncleared check that's sitting around for a week or two, we're fine with. But if you've got a double entry, like there's a deposit that's supposed to have happened 2 weeks ago and it's still uncleared, well, that's something you need to fix and resolve. So that is part of the reconciliation. And I note it here because so many times I see learning bookkeepers see the big fat happy zero on the reconciliation screen, feel done and finish without resolving the uncleared items. So that's why I note it. And it's helpful to make a checklist specific for the business that you are working on the bookkeeping for. So instead of using a generic one, make one specific to that business. So for example, we've got Triangle, CIBT credit line, or line of credit, the savings, the checkings. These are all the very specific items that need to be reconciled for Grand Gate Gardens. And again, if there's other entries that you need to remember to do that don't have paperwork, feel free to slot them in here as well. Now that we're talking about reconciling, you'll see MasterCard has some extra verbiage here. We have reconciled all of these accounts for June, but the last MasterCard statement was dated June 16th. It was dated in the middle of the month. So there's one extra step to do as part of our month-end review is, yes, we've reconciled the most recent MasterCard statement, but we need to do one extra step and just make sure resolving any uncleared items that should not be there. So let me show you where we do that. There's a couple of places to do it. For me, the quickest way is to use the reconciliation screen. So I'll just type Triangle in here. And I say statement 0 balance, and I just put the end of the month here. And then I go to start reconciling. And I'm not looking to actually reconcile, I'm just looking for white lines. So I just want to make sure that nothing has been entered and not cleared the bank feed, because we've cleared the bank feed to June 30th. And then the next step is just to make sure there's nothing has been entered that hasn't cleared. So that's an extra step to do when you're doing your month-end reconciling and your month-end review. We don't have to save for later. We can close without saving. The other way to do that is to go to Chart of Accounts, go to Triangle, or whatever card you're looking to, or account. And then you just use account history. And in this register, you can see items that have cleared and items that have not cleared. And then if you go to the filter, that's when you can say, show me no status. And the no status apply. Those are the things that have not cleared the bank. And looking here, I can see there's actually 2 in July that haven't cleared the bank. And I think I'm going to have to revisit that bank feed before publishing it out to the masses. But for the June month-end review, there's nothing uncleared for June. So I'm going to go back. So now that we have confirmed that our accounts are all reconciled, so we've reconciled all of these as well, and we've also gone the extra step to make sure that there are no uncleared items in an unreconciled period for all of those statements that have middle of the month dates. Now we can move on to the review section of our monthly checklist. So the first step in our review process is a bit of housekeeping. You want to look at your unpaid payables and receivables just to make sure there's nothing sort of hanging out there, that maybe you've got something double entered, or maybe there was a bill that was paid by cash and you have to mark that as paid by cash, or even an invoice that's unpaid and you ask the business owner about it and they're like, oh, that was paid cash. Then you're just going to want to go in and mark that as paid by cash. So let's go ahead and do our housekeeping of our payables. What we do is we go to Reports, and we're going to start with our unpaid bills. And looking at the unpaid bills, we've already checked the GNOME hardware to the statement. Now, there's that McGroots where the payment was greater than the bill. That looks like a housekeeping item to clean up. We talked about that. Ontario Power we're okay with. She just sort of overpaid the account. Maybe now's the time that we want to put it on our list of questions to the business owner, just saying, hey, just so you know, you overpaid this. They'll get the statement, they'll see it. You might not want to do that. And we've got our WSIB. Oh, that'll remind us. Maybe if it's near the end of July, it's time to pay those. But right now we're doing our housekeeping, and the thing that sticks out to me is the McGroots. If you remember what happened here, is the bill, so I'm going to open up this bill payment. So the bill was $446.35, and an e-transfer of just $450 was sent over, and this causes incongruencies in the bookkeeping, so the business owner might think it's quick and easy, but it's going to cause more work and time in the bookkeeping, so just pay the amount on the bill. That'd be great. The result of that was there was an overpayment of $365. Now, the reason we didn't clean it up at the time is because we're like, what is McGroots going to do with this, right? Is McGroots going to reduce the next bill by 3.65? Like say, hey, pay $3.65 less? Like, do they give you a statement to show what the balance is that incorporates this overpayment amount? Or did they just write it off, right? And we'll wait to see what they do. And if they just write it off, then we'll just write it off. And indeed, they haven't sent us a statement. And indeed, all of the bills after this, we've just paid the full amount. Nobody said anything. There's been no communication to say, you know, reduce your next payment by $365. So they most likely have just written it off on their end. So how do we write this off on our end? There are a couple of options, as always. One of the options is to just increase this bill 8661 to $450, and they'll close this payment out and there's no longer credit on the account. I don't like to do that. I don't like to do that because what's happening then is if ever somebody's like, how much was 8661 for? We don't have the original amount in the bookkeeping. Or if McGroots is like, there was a bill once for $446.35 that you never paid me for. And if we just look up the amount, $446.35, we will not find that amount in the system. So it's a red herring in the future if we're trying to troubleshoot. So just changing the bill to $450 is an option, but as you can see, one that I don't like because it can cause problems in the future. The best option, I would say, is to create another bill for $365 in the system, dated the same date as this bill, with a note about the overpayment of the e-transfer or the underpayment of the e-transfer. So if it's underpaid by a little bit amount and you just want to get rid of it, then you would put in a credit memo. Whatever you need to put in to be able to click something off here to get rid of this transaction will create an additional blah of $365. So before I put that overpayment bill in or rounding overpayment bill in, I'm going to look to see what the original category was of this bill that was overpaid and just make sure that I put the overpayment to the same category. So we'll put it to purchases and materials COGS. And it was June 8th. And it was, just to go back to the payment, $365. So let's go ahead right from this bill screen. So I'm going to see the bill date and the bill number, Control C. More, copy. You could have said save and new and then said McGroots would have worked as well. We'll say June 8th, the date of the bill that was overpaid, and OVP on 8661, and that was $365. That was out of scope. In the description, I'm going to say payment rounded up to 450 on invoice 8661, 365, and we're going to go save and close. And you can see it's valued the report to show that now we don't owe anything on McGroots. But we're not done, right? It's still showing up. The bill is sort of still payable, and this bill payment still has an overpayment to apply. So we have to match them up together, close them out. So I'm going to open up that bill payment. And there is the bill that we just entered, and this overpayment will disappear as soon as I click this. The 365 from there to here. Save and close. Yes. Yes. And now we can see that it is cleaned up, closed out, and nice and tidy. So now that that housekeeping is done, we're taking a look. I don't see any other items that are double entered or questions for Sarah. The next on our review checklist was to look at the open or unpaid invoices. Now, here on the payables, you can see they've got amount and open balance. Let's go next to reports. And now I go to open invoices, and it is down here in the who owes you. And if you're ever trying to look for a report to put a green star on, you can go Control F and just type open invoices. And this searches the web page, and we can see that you can go through, and then you'll just click the star so it's green, and then it comes up here in your favorites. So we'll go to open invoices, and the open invoices report, it doesn't show the original amount, just the open balance. I like how it had, like on the payables, it had the original amount and also the open balance. So what I like to do is I like to add the column amount, but watch this. If I hit amount here, it's in a weird order. I don't want open balance and then amount. I want amount then open balance. So I just have to first unclick open balance and then make sure I add that last right there. And because I don't want to do this every single time, I'm just going to go ahead and save as. I'm going to call this one with original amount and hit save. So now that I've just sort of modified that to how I like it, next time I come here under reports, I'm going to go to custom reports, and there's the one with the column that I like. So let's take a look at these open invoices. So I see that there's one in June. That makes sense to me that it might take them about a month. In our experience with Grand Gate Gardens, payments have not tend to gone longer than a month. So we might ask about this Mike check invoice. We might send an email or a note or add it to the questions list to ask about it to Sarah if that is still payable, or was it paid by cash, like what happened. But I mean, outside of just adding that question to the list, and again, it's less than 60 days, so you might not even do that. But if this is like January or February or something, absolutely you want to find out what's going on with that. And Sarah might just say, I'm still chasing payment, leave it there, which is fine. And then at year end, we would sort of say, hey, we're closing out the year. Is there any of this you want to put to bad debt? This is also sort of part of what I do because the GST HST filing is coming up. I always that's usually when I ask, I'm like, are you getting paid for this? Because we're about to file the HST, and we file the HST with the HST collected the date of the invoice, not the date that it was paid. So maybe every time you go to file HST, just making sure there's no bad debt entries to put in is an important, I think is an important question. So we reviewed the payables, the receivables, and everything looks good. So let's come back over to our list. And the next thing to do is to look at the month-over-month profit and loss report. Now in the list I said 6 months, sometimes I do 3 months. It's just as long as you do the amount of time, enough amount of time for you to see the history to help you sort of look to make sure everything's reasonable, nothing looks missed, there's like consistent monthly utilities, the loan interest is in there. I mean, sometimes people will put a loan payment just directly to the loan without putting the interest portion into that entry. And then when I say no other incomes or expenses that are unresolved, that includes like if you've got an expense categorized to a parent account and you need to sort of categorize it to actually one of the sub accounts if you have sub accounts, because I've noticed that that can happen and needs a little of cleanup or housekeeping. So let's pull that up on QBO. We're going to go to Reports, Standard Reports, Profit and Loss. And this time I'm going to do it in the new view. And I'm just going to be looking at the March 1st to the June 30th. Like that. And to get that month over month view, we're going to go to Display. And then display columns by transaction date, pull it down and select months. And that's how we get the month over month view in this non-classic view. So now what we're going to do is we're just going to review the profit and loss to make sure everything looks reasonable, nothing looks miscategorized, nothing looks missed. We're not actually doing an analysis right now on the profitability of the company. We're just checking the bookkeeping and making sure we received all the paperwork. So for example, there's no garden center sales in April. Well, we know that she didn't actually open the store until May. So that's something that seems reasonable to us. And we're scrolling down. And now here's something interesting. The bank charges jumped way up. So we can just click on that and see why. And here's the detail of just June, and we can see, Bonnie Car Automotive. So that was we put the PPSA fees for that truck purchase to bank charges. So that makes sense that that's a little bit higher for the month. We're okay with that. We can see that there's no cash register over under in these previous months because we only just started reconciling the cash register in June. For the internet, I don't see any missing months, so we're not missing the internet bill this time. But interesting, you can see that even the AI helper is pointing out this 370. It's jumped up quite a bit from office expenses. So before AI, I would have just clicked in to take a look. And we can see that the biggest hitter right here is actually the Lenovo tablet that was purchased. And this is another part of when we're reviewing the profit and loss. If there's like big jumps, you just want to make sure that it shouldn't have actually gone to an asset, right? So if this tablet was over $500, it would need to be actually capitalized. That is something that the business has, not an expense. And so it would need to go on the business's balance sheet, something that the business has. And we would categorize this to computer assets. But it's less than 500, so it makes sense that it is in the office expenses. So let's take a look at what the AI analysis has to say about it. And it's telling us how much it's jumped up. And it actually has rooted it out for us that it's the Best Buy, but it's also noticed that Shopify has begun charging us funds now. In May, there was no Shopify fees. And we might think, there was Shopify purchases. And so we might ask, Sarah, was there a Shopify charge to your personal card in May that you just didn't tell us about? And she might say, oh no, they had like a 30-day free trial or something like that. So as you can see, the AI did go a little bit deeper than we did, but it's doing the same sort of thing that we're doing. So I'm gonna close this out. And as I scroll down, I don't see anything going to the parent account that I need to put down in the child accounts below or sub accounts below. We've got consistent rent expense, and we can see the utilities are higher in May. That's because there was a water bill. Water bill and town bill is every other month. So that's sort of why it's going to jump up every other month. But I don't actually see anything else that we need sort of to address here. But as you can see, going in and digging in is a very important step in making sure that the bookkeeping is accurate. And you don't have to be the bookkeeper to do this. So this is a great review that you can do if you are the business owner, just to sort of check the bookkeeping, just to make sure that the bookkeeper hasn't missed anything. There was no miscommunication between you and them. So let's take a look next on this review. So we did the past 6 months month-over-month comparative. And next, I'm suggesting to do a year-to-date versus last year-to-date analysis. I've added it on this more thorough checklist. We haven't needed to do it for Grand Gate Gardens because she wasn't open last year. But let me show you what that looks like for businesses that have been open for longer than a year. So first of all, let's get rid of that month-over-month filter. So I just hit clear. And next I'm going to, you can say year to date here, but I'm just going to go and say January to March, to June. There's not going to be any difference, but if we're doing year to date, and again, this is fiscal year to date is generally what I do. And then you go to compare, and I'm going to go to, I could say previous year, and that should show it for us because I said January to June. So it's got January to June now, 2024. Well, I think the previous year to date would probably work as well, just how I have this set up. Yep, and that's working as well. And so when you're looking at the year-to-date current versus year-to-date previous year, again, I'm not quite analyzing sort of the profitability of the business right now. I'm just reviewing the bookkeeping just to make sure nothing was missed and no paperwork was maybe not handed in to me. Is I might notice, for example, that there is insurance. Maybe there's an insurance payment once a year and we had it already this time last year and then it's empty and it doesn't exist this time this year. So that might prompt me to add to my questions to Sarah, hey, your insurance renewal was in June last year. I haven't seen it yet in June this year. And she'd be like, oh, yes, no, that was paid by my personal account or something, and send that information over. So analyzing the previous year to date can be helpful for finding things that might be missed, or maybe we've categorized things differently and we want to put it back to the way that we used to do it so that we can compare apples to apples when we actually get to the actual profit and loss analysis profitability of the business. So looking at what is next on our bookkeeping review checklist, we can see next up is looking at the balance sheet. So let's take a look at the balance sheet together. We're going to go to Reports, Standard Reports. We're going to click Balance Sheet. And when I do the balance sheet review, we do it, first of all, we're going to make it to the end of the period we're checking. So June 30th. And I don't do a previous year comparison on this one. I just compare it to the end of the previous period. So in order to do this, I would have to say June 1st to June 30th to get the previous period, which is May 1st to May 31st, or I can just say do May 1st to May 31st. May 1st to May 31st. So the profit and loss that we just reviewed, a lot of people are familiar with it because they know it's their revenues and their costs and expenses, right? But what I sort of describe the profit and loss as is how much so far, because it's really only balancing how much so far from the beginning of the year. Now the balance sheet, I call that what you have and what you owe. So profit and loss, how much so far this year. Balance sheet, what you have and what you owe. And so it's technically not from and to a period of time. The reason we have from and to here is so that when we click in to see the transaction history, it doesn't show us like all time. It's just showing us what window we're looking for. But this June 30th date, it's going to, whether this is like May to June or like December to June, it's still going to be as of June 30th, just like your balances in your bank account. This is why I call the balance sheet what you have and what you owe. So this is the balance of what the bank was as of May 31st, and this is the balance of what the bank was, Canada Bank Checking, as of June 30th. It has changed over the month. And we can see that there was no funds in savings at the end of last month, and there are funds in savings at the end of this month. Now, you might be wondering why cash is negative. Now, cash is negative. Now, we are reconciling register cash, but this cash is related to something that was paid with not a business account outside of the register cash. Specifically, I think this one was Canadian Tire money redeemed. But if you do have a cash account that you're not reconciling, it's going to start at 0. So every time, like maybe the owner or the shareholder just pays something cash, then it's going to go down, negative. Who do we owe? Well, whoever paid the funds with cash, which for the most part is going to be the business owner or the shareholder if it wasn't paid out of a reconciled register cash account. And so that's why when you see this negative, we at the end of the year or the end of the period, whatever cadence you choose to clear this out, but we would clear it out to owner's contributions or shareholder loan and reset that back to 0. Now, the reason the gift cards issued is negative, this is because gift cards issued is actually a liability. So usually we would see gift cards issued not in the what you have section, but down here in the what you owe section. But because of the way that we've been using gift cards issued in QuickBooks, we use it as an account to receive payment from our customers. And it's the restriction that QBO has put on us to say you can only accept payment into an asset account. That is why I have the gift cards issue set up as a negative asset. So what's a negative asset? A positive liability, right? And so if you were wanting this balance sheet to sort of be more representative of what like an official financial balance sheet would look like, you might want to change that general ledger account from a current asset over to a liability. But as soon as you do that, you'll not be able to use it as an account to receive payment from towards an invoice. In which case, if you wanted to continue that way, then you'd have to start using the journal entry feature as opposed to the income, the invoice interface that QBO provides. Now, in our case study, we've already gone and reconciled our gift cards issued. So we know that Shopify has a liability showing of $460. And we also can see the usage, if we were to open that up, of the gift cards that are issued and used outside of Shopify. And we've also reconciled register cash. So that's another one that if it sort of goes out of whack or isn't reconciled can start to become negative. And if that becomes negative, then you're not actually reconciling register cash. It's just more like a cash account at that point. And you want to keep your eye on it because if it gets super negative, then that means that the shareholder is putting a lot of their own cash in there, or maybe something else is happening. This is why we like to reconcile register cash. But you've got to keep your eye on it too, because if it becomes too high, at the end of the year, the accountant's going to be like, do you really have $13,000 sitting in your register cash? Which you probably don't have $13,000 sitting in your register cash. And if that doesn't resolve itself, meaning maybe that was like in the meantime, money's going to the bank or something. So if that doesn't end up resolving itself and it's like a huge number sitting in register cash, well, again, that's another issue. If register cash isn't being reconciled, where did that $13,000 go? And if it isn't being reconciled, then the accountant is just going to have to assume that the owner or the shareholder has withdrawn that money out of the register cash themselves. That gets moved to the shareholder loan. So if register cash is very negative, and we move it to the shareholder loan, that means the shareholders loan funds to the corporation. But if this is a very high positive number in register cash and we just like zero that out to the shareholder loan, well, now that means that the shareholder has withdrawn a lot of money from the corporation. And withdrawing a lot of money from the corporation is actually a taxable income to the shareholder. If the shareholder withdraws more money than they give to the corporation, then that means that they have an income that they're pulling from the corporation and they're going to be taxed on that if the business is incorporated. So that's why looking at those cash accounts, being aware of what's going on with them is very, very important, maybe a bit more important than most people realize. If the business is not incorporated, if we're talking about an owner contributing and drawing funds, well, the owner of a non-incorporated business, their taxable income is actually the profit of the business from the profit and loss. Next in line, we see undeposited funds. So it's zero. This means there's no funds in transit. We use the undeposited funds to track funds in transit, so checks that are received but not deposited into the bank, and usually for combined deposits, so 2 or 3 checks received and then going into the bank together. And you've seen us use the undeposited funds throughout the case study. But when I'm doing a check of a bookkeeping file, just because that says 0, or even if it doesn't say 0, I still like to just crack open that bank deposit interface just to make sure nothing is in there. Sometimes it says 0 here, but then I go to the bank deposit screen and there's a bunch of positives and negatives that haven't been resolved yet, that just happen to balance to 0. Yes, I have seen that before. So we go over to new, then we go to bank deposit. So I just crack this open just to make sure there's no stale or unresolved items that need to be addressed sitting here in the bank deposit screen. And you might see a balance here in undeposited funds as of June 30th, but when you open that bank deposit screen, it's empty. Well, that means it's been resolved. Let's say somebody paid a check on June 29th and it didn't get into the bank until July 1st or July 2nd. Well, on the balance sheet, you'll see an amount in undeposited funds, but if you go to that bank deposit screen and it's empty, that means it was just funds in transit that happened to be over the June 30th date. We can see accounts receivable has gone up. Now this POS clearing, it's got that 260.83 sitting in it, but we've reconciled. We know that that 260.83 is actually deposited in July. Now, one of the things I definitely do is look at the assets that have been entered for the month, because I can see that it isn't the same amount as last time, right? I can see, oh, I do need to click into this. I can make sure that everything in this list or everything that was added, say, to this asset account is actually an asset. Sometimes I find that people will put in an expense to do with the trailer equipment. So maybe she bought a hitch for $50 and they're like, oh, that's trailer equipment. Well, no, that's actually just an expense because it's less than the $500 capitalization line. Now this 130, that is less than 500, but it actually is part of that trailer purchase. $1,000 was paid for the trailer, and then $130 was paid for sales tax in regards to that trailer that's not captured again. And the way that sales tax works is if it is a sales tax that you're not going to get back, so it's non-refundable, like it's not an ITC, it goes to whatever the expense was that it's associated with. So the value of this utility trailer when it was purchased is actually $1,130. Now, this might remind me right now to say, oh wait, I talked to Sarah about that MTO purchase and she let me know that she was going to ask the Ministry of Ontario for that money back. When I recorded that video, I showed you how she could do that. And if she did that, maybe right now be like, I don't actually want this in this asset category anymore. I want to put this over to, let's say, vehicle expense, and then when I get the 130 back, I'm going to reduce the vehicle expense when that money comes back. So again, going through the balance sheet, taking a look at things helps trigger us to see if we need to do any cleanup or housekeeping. So coming back to the balance sheet, one way that you can look at all of the asset purchases at once is total. And what this is going to show us is all of the things that got put into the fixed asset accounts for the month, or for the periods that we have up here. If we wanted to limit it to just the period that we're looking at, on the summary report is where we would change that from June 1st to June 30th. And then every time we clicked in, we would only see June. But we can see that everything here to me is an asset, so that makes me happy. Scrolling down, we can see there's accounts payable. That changes, that's fine. We've reconciled these. Well, we didn't reconcile the owner's CCR bank, but it's not getting out of control. So here we can see that there's customer deposits, and that's like a lot of things all combined. So we can see when we click into it, it's not just one thing for 200. So for example, Minnie paid us $200 a deposit and then we applied it to the invoice. So it's actually a combination of a lot of things. If you wanted to know who that $200 represents, what you can do is you can actually reconcile your customer deposits with the reconciliation screen. So let me show you what that looks like. So what we would do is we would go to transactions and we'd go to reconcile. And just like we use the reconciliation screen for our clearing account, even though it's not a bank, we can use the reconciliation screen with our customer deposits. So we're going to go to customer deposits. And again, I just go from 0 to 0. I'm just clearing out the matches. And so we're going to reconcile for the end of June right now. You can do this every month, every quarter. Definitely do it at least once a year, but every month is a good time to do it. Oh, and we're going to say 0 for sure. Start reconciling. And here we want to make sure that the difference is always 0. Right now it is in date order. I actually find it easier if I put it in payee order because look, War and Peace, in and out. Yep, perfect. This means he's claimed his customer deposit on an invoice and we got the amount right. We didn't say, oh, your deposit was $250 and we got it wrong. So again, this is just not only letting us know what deposits are still outstanding for who, but it's also making sure that we've applied the deposits correctly. So Minnie, in and out. Joe, in and out. Now, Dynamite doesn't have a partner, but Carol Singer does. So this is how we know that the 200 that's in on that balance sheet is actually just representing the client deposit from Dynamite. Now, if I go finish now, I've paired them all up. I've noted them as cleared, right? Now, when we go to do it again, let's say for July, if we were going to be doing this monthly, and let's say 0.0 and start reconciling. Now you can see, this is showing us a July one. The ones that we cleared away are gone and we're just looking at the ones that are outstanding. So I'm not going to finish this. That will be for July. So we've reconciled the customer deposits. Actually, I think I'm going to add that to the monthly checklist for Grand Gate Gardens. Coming back over to the balance sheet, we'll continue our analysis. So GST HST Payable is at $7,556.16. One of the checks that I'm going to do with sales tax speaks to this, but notice on the sales tax module, it says right here that as of June 30th, the amount payable to CRA is $7,556.16. $7,556.16. So that's another thing that you're checking to make sure that the data in QuickBooks is good. GST HST Suspense. This represents what's payable or receivable on your CRA My Business account, sort of after things get filed. So once this gets filed, it moves down to GST HST Suspense, and then CRA on their side has, we owe you $7,000. And then when they send it, it offsets and it gets into the bank. That's when we offset the suspense. Also, if there is like a balance payable on CRA for GST HST that just doesn't get paid, then maybe interest or penalties, we're going to make sure that that GST HST suspense account increases with the GST interest and penalties. So we'd increase the CRA penalties and interest expense, and then we'd increase that GST HST suspense. So I generally say that this account represents what CRA says is due and owing. And also on that checklist, I do note like all of the CRA balances, right? So if this is an incorporated business, you also want to check the corp tax account that balance matches as well. So moving down, we can see next we're on payroll liabilities. That's another one that you can check on CRA just to make sure that everything is going the way that it should be going. And let's just crack this open. And we can see we're actually showing everything from January to June. I'm going to go back. I'm just going to select just June for this. So now that I've selected just June up here on the balance sheet, the numbers haven't changed. It's still as of June 30th. But what that means is now when I click into this total for payroll liabilities, it's only going to show me the June entries. And what we can see is QBO is tracking the vacation pay payable. And here we can see the federal taxes payable. So this is the CPP, EI, and income tax, not only what was deducted from the employees, but the employer portion as well. And we can see that everything's going well because at the end of May, we owed $739.83, and that represented all of the May payroll. And we can see that we're paying out $793.83 here on June 16th. So if that balance doesn't match that balance, why is that? Is there something from before May that carried forward that didn't get accounted for? So part of this end of month check or bookkeeping review check, I'm just making sure that everything's doing what it's supposed to be doing. And if that number didn't match that number, that would mean something for us to go ahead and investigate. But right now we can see everything's working fine, so we can go back to the balance sheet and keep working down it. So going down, we can see the advance. Again, I did mention when I was talking about advances, I kind of like it on the same line. QBO splits it up, so you can change that if you want. We talked about that already. Next, we can see we're at Bunny Car Credit Services, the 2025 Fjord truck loan, and we can check this number as well. So when we entered the asset purchase and the loan, I discussed creating a loan amortization or asking for the loan amortization. And what that is that's how the interest portion changes for each payment over time. So here is that amortization schedule that we did together when we put the purchase in. And we can see that the actual principal of the loan was $49,381.39. And then the first payment, we'd want to see the balance go to $48879.98. And so here we can see that it's that original purchase amount, because this is still as of June 30th, of $49,381.39. And of course, if this was a future month that we were checking, then we could just, let's say we were checking this as of the end of July. You can see that there is the principal portion of that entry that we put in on July 3rd that had part of the loan payment was principal. That's the actual loan balance owing, and part of the payment was interest. And only the principal part is hitting our loan account. So now we have $48879.98, and that matches our amortization schedule for the principal as of the end of July. So going back to the balance sheet. So moving down the list, now we see owner's draw contributions. So I've said from June 1st to June 30th, we're going to crack that open. And what we're going to do is we're going to add a column just to make sure we didn't accidentally put GST, HST on any of these entries. So all we need to do is add a column, and we are going to add the tax amount, and I'm going to add the tax name, and that's just to make sure that they all actually say out of scope and not 0 rated or exempt. And we can scroll over and we can see no tax has been claimed on any of these entries, and they all say out of scope. And everything here, we've noted that this is GNOME hardware, but it's the personal grill pan. We can see stand corrected, Jane's portion of the Udo bill. And it's just a quick line of sight on the owner's draw contributions, just to make sure that nothing has gone in there that shouldn't have gone in there. So when it comes to a non-incorporated business, that's important because we want to make sure that we're claiming all of the expenses for the business. And it's very important to make sure that we haven't claimed any sales tax for items that are not related to business expenses. But in the case of a corporation, it's even more critical because any funds that any of the corporation's funds that the shareholder used to pay for personal things, if the shareholder doesn't give it back to the corporation, that now at the end of the year is considered taxable income for that shareholder. So this is a very important general ledger account to be aware of, because it is a direct effect to a shareholder's income taxes and can get really high if nobody's watching. So it's good to have eyes on that, and that's why I've added it as part of the balance sheet review, especially just making sure that there's no GST, HST on any of those tax transactions inadvertently. You know how sometimes QuickBooks updates with a default after you've looked at it, like it set out a scope, you turned away, you came back, and then QuickBooks took a moment and then put HST on it. Things like that can happen. So it's nice to have crack this open and have a quick look. Now, when it comes to retained earnings and net income, there is no retained earnings for Grand Gate Gardens because this is their first year in operation. But when their fiscal year comes to an end, and for Grand Gate Gardens, it's December 31st, the net income moves up to the retained earnings, like our profit from last year. That's what retained earnings is, our profit or our loss from last year, which means this net income, that is our profit or our loss for this year. So this equity portion of the balance sheet is really just talking about how funds are flowing in and out of the business entity. And so, of course, the balance sheet being what you have and what you owe, this equity section is like, and where did it come from? Where does what you have come from? That's one way of maybe thinking about it. So this net income, it really is how the balance sheet is tied together with the profit and loss report, with the income statement. This is how the balance sheet brings all of the transactions together. That's how it balances, right? Maybe your income goes up and your accounts receivable goes up. Well, that's why this can balance, because accounts receivable, that's up here in your asset section, and your income, that's part of this number right here. If we clicked on this number right here, you can see it is taking us to the profit and loss. That number down at the bottom, 637562, and it's a loss for her as of June 30th. That's the year-to-date profit or loss of the business, and that's how it ties it all together to the balance sheet. I'm going to pull over the checklist just to make sure I didn't miss anything. So this last one I put in as a reminder, because once you've finished a year with the file and you send the trial balance over to the tax preparer, it's going to take, a few months for them to process the return and tend to let you know what the year-end adjustments are, because they do adjustments like they depreciate the assets, there's income tax payable, or any other adjustments that they see that need to be done at year-end. But I found that the accountants put those adjustments maybe in with like the package for the business owner, and the business owner doesn't know to pass it on to their bookkeeper. Or maybe the business owner just looks at it and glazes over, and you're the business owner and you're like, oh wait, I got to put this into my bookkeeping. Or maybe the accountant has access to the bookkeeping and has asked, can I just put these in for you? Whatever the case is, you have to know, but you don't remember to check because you gave them the year end like 3 or 4 months ago. So I have noticed for me, I need to remember sort of every month for the next few months, did they go in? And I have it on the monthly checklist to remind me. And then once it's in, I can populate this with entered and done. I don't have to think about it again until the following year. So that is it for the review of the bookkeeping file. And again, I mentioned that it's a useful review to do, even if you're not the bookkeeper and if you're the business owner and you just want to check the bookkeeping file to see, does it look reasonable? Is there anything missed? Is there any odd things that aren't quite matching? Now, what this is this is a monthly checklist as well as just a review to remind me to do the next steps for this client. So the next steps would be send the questions to the business owner. So not only do I have my questions, and honestly, if your bookkeeper isn't sending you questions, like I've never not sent questions. Like there's always something that you miss giving the bookkeeper when you're a business owner. It's just the nature of running a business. So if they're not asking you questions, maybe ask them, is there anything that I missed? Do you have any questions? Or maybe do this bookkeeping file review just to make sure that things are going in smoothly. Now, when I send questions over to the business owner, I send an NR list. So we've talked about it in the past that when I'm entering in a transaction that I don't have source documentation for, I'll add an NR tag, which stands for no receipt or needs receipt. Funny, I just started doing this like years ago. And a few years after that, I was at a bookkeeping conference, and other people who I admire, colleagues that I see online, they also use the term NR, an R&R tag. So it's not just me who uses them. It's kind of neat. But I send that list. You can send a report to the business owner. So we're going to go to reports, and I'm just going to Control F, tag. So we've got not the profit and loss by transaction list by tag group. And I think there was only one in this case study. So I'm just going to say all dates for now, but you would put the date of the bookkeeping period that you're doing, run report. And I would add the column tax, which is further down, and I can't get to it. Maybe that's why there it is, tax amount. Too bad I can't switch to the new view. Maybe that's why they made a new view. I'm going to click above here. And now we can see the tax that was claimed on Gotella, even though I didn't have the paperwork to support that. Because a lot of times, yes, Gotella is going to have tax, but I want to show what I did and didn't claim HST on. And I can export this to Excel. Then I can add a column for the business owner to sort of respond and say, no, this is not internet, that actually was something else. So it's to correct my assumptions. And with some clients, I even sort of split them up and say, these are the ones you have to give me. These are the ones that I don't really care about. I don't want to make them do more work than they need to. I do explain the risk. When I send these reports out, I say, here are the items that I put in without source documentation. These are the ones I need you to give me. These ones you can give me if you want. Know the risk if you don't. And the risk is, if you ever get reviewed by CRA, for example, for GST or HST, a review, there's no risk to the little ones because CRA on the review, they just look at the big things. That's what a review is. But if you're ever audited by CRA, they want to see every single receipt. So the risk is there, but it's just little. Like if you're missing a receipt for $5, is it worth the time to go find all your $5 receipts? It's just $5. And if it's an income tax audit, that's only 20%, like the income tax portion of the $5. So materialistically, I don't necessarily need all of the receipts. I like them because I'm a completist and I want to make sure it's accurate and efficient, but I also don't want to make business owners chase for receipts that aren't going to takes more time than it's worth. And so that's why I want them to make that decision though, right? It's their business. It's their risk. Your risk of not having the receipts is to you, not to me. I'm just putting in the paperwork that you've given me. I'm letting you know what you're missing so that you can make that decision. You know what? I don't care. It's $5. You've put it to the right category. I'm fine. So that is part of the communication each period with the business owner is I send an NR listing and I also let them know which ones I have to have, right? Like if it's a subcontractor bill, you give that to me because honestly, I have seen so many subcontractor relationships break down so that in the 3 or 4 years in the future when the business gets audited, I'm like, oh, I need all of these receipts. And they're like, I'm not talking to that person anymore. That person's out of business. So make sure you get the subcontractor ones. Oh, and anything big or asset purchases, there's just ones that I'm like, I've put it in so you can analyze your profit and loss already. But you need to give me that receipt because that's way too much of a risk to not have for the bookkeeping. Then I do send that listing of the draws or the shareholder or the owner's draws for the period, just so that they can say, hey, hold on, why did you put that meals receipt to owner's draw? It's like, well, because it wasn't business related. You didn't write on it why it was business related. You didn't give me the receipt to say that it was business related. Little things like that, just to make sure we're on the same page so that they know what they're submitting that is not going onto the bookkeeping. I do send the unpaid bills listing. I ask about the older items. I'm doing this before I file the HST because they might say, oh, you know what? That was bad debt or something like that, or that's double entered, or I paid that by cash. So we want to ask about those older items for the housekeeping. And then we write down what date we sent the questions and to make sure that we hear back to continue the bookkeeping and finish it off and finalizing it. And then, of course, answers from the book business owner is then entered, and including the bad debt entries if applicable. I might put that there, bad debt entries if applicable. So if you are a business owner and you are not getting anything from your bookkeeper after the month is completed, these are some specific things that you can ask for. Say, hey, can you give me a list of the things that I'm missing receipts for? Hey, can you give me a list of the items that you put to shareholder loan or owner's draw? So not every bookkeeper does the same sort of thing, but in my experience, I've found these to be very helpful to both the business owner and to the bookkeeping. Now we're moving on down the list. Now we're getting to the GST HST. And at this point, if the month completed is period ending, PE is period ending, for GST HST. So June 30th, we've got April to June is to be filed for HST. Then the next step is complete the GST HST filing checklist. Has this been completed? And the answer is no, not yet. And we're going to flip on over to the GST HST filing checklist.